Hi, I'm Lou from Dividend Dog. Welcome. Here we look at stocks with an emphasis on dividends paying stocks. So if that's your kind of thing, please like and consider subscribing to the channel. So here today we're going to look at a company. It's called Paramount Group PGRE, which is a REIT, a real estate investment trust owning buildings in New York City and San Francisco. Please note not to confuse this with Paramount Global. That's the entertainment and movie studio that I covered in episode number 8. And remember, a REIT, the real estate investment trust, it's a type of company that what they do is they don't pay tax at the corporate level. Rather, they pay bigger dividends as long as they pay out most of their net income in dividends. The investors get more dividends, and then you pay at a higher tax rate those dividends you get. That's just a general idea of what a REIT is. So here, to go into the history of Paramount Group, it was started in the 1970s by Professor Dr. H.C. Werner Otto. And remember that last name, Otto. In 1991, Albert Behler joins as president and CEO, and he continues his longtime leadership today. In the mid-1990s, they decided to focus on Class A office buildings in New York, Washington, D.C., and San Francisco. November 2014 is when Paramount Group went public in an IPO as a REIT. They priced at $17.50 per share, raising over $2.2 billion. 2019 to 2020, Paramount decides to exit the Washington, D.C. market, but expand their San Francisco holdings. So today, the focus is on owning buildings in New York City, basically Manhattan and San Francisco, and they also manage others for investors and funds. Recently, they've been the target of 2 buyout attempts. One was by Bow Street, that's an investment firm. They gave a cash offer back in November of 2020 of between $9.50 to $10 per share. And then the second buyout attempt was by Monarch Alternative Capital. That was in February of 2022. It was an all-cash offer of $12 per share. And in both cases, Paramount Group declined, saying that the price was simply not enough. Which is interesting because now the stock trades for $6 and change, but Paramount believes that even the $12 a share undervalued the company. To go into the finances of this company, looking at the annual report from 2021, we look at page 66. We see that the core FFO, the funds from operation, was 92 cents. It was 96 cents in 2020, 98 cents in 2019. So the company has been hurt over the last few years. Of course, when you're in the office buildings during pandemic, that's somewhat expected. They were paying dividends at a rate of 10 cents per quarter per share in 2018 and 2019. This was lowered to 7 cents per quarter at the end of 2020. In March of 2022, it was raised to the present 7.75 cents per quarter. So right now that equates to an annualized 31 cents per share on an annual basis per share. On page 72, we can see the balance sheet, the total assets of $8.4 billion versus total liabilities of just over $4 billion, leaving total equity of $4.4 billion. Dividing this equity figure out by the $218 million diluted shares on December 31st of 2021 gives me an equity value of $20.36. Note that on the balance sheet, the lands and buildings are stated at cost, minus $1.1 billion of depreciation. So in reality, it may be understated or overstated. I tend to lean towards more the buildings and the land being worth more than what they paid on the whole, but that's just my gut feeling. If that is true, then the shares would have an equity value of more than the $20.36 per share. But let's look at more recent numbers. We see in Paramount's November 2022 investor presentation, we see that they report just over 222 million shares outstanding. And when combined with the operating partnership units, we have 238.2 million shares and units combined outstanding. So the last 10Q from October of 2022 shows a similar amount of equity. It's 4.4 billion, just over 4.4 billion, shows a calculated equity value per share of $18.56. On the same November 2022 investor presentation, they showed at Green Street's estimate, the estimated net asset value being $16.25 per share. Now, I don't have access to Green Street's advisor's report because I'm not a subscriber, but they say they're, if they're correct at the $16.25 per share, remember the shares right now are only trading in the $6 range, so that's a huge disparity here. Shares should be trading, $10 cheaper than they should be. So I don't know, but when you look at that, maybe these private equity and these investment firms, maybe they're onto this, and that's why they've been a subject of 2 buyouts just in recent history over the last couple of years. They know a good thing when they see it. On page 77 of the 2021 annual report, we see the cash flow statements. Net cash provided by operating activities was $244 million in 2021. It was $237 million in 2020 and $285 million in 2019. So they should be able to pay out the 31 cents a share per year in dividends if they choose to do so. Out of all these properties, which are bringing in the money and which are the most valuable, we see the list on page 37 of the 2021 annual report. Number 1 is 1633 Broadway in Manhattan. It brings in over $189 million annualized rent. Paramount owns 90% of this building, so their share would be over $170 million per year from this one building. The November 2022 presentation says it's 25% of gross asset value. That's what Green Street is estimating this building at. And number 2 is 1301 Avenue of the Americas in Manhattan. This one is 100% owned by Paramount. It brings in an annual rent of $109 million per year. The same November 2022 investor presentation says Green Street assigns at an 18% gross asset value. And number 3 is One Market Plaza in San Francisco, which brings in over $151 million in annual rent, but Paramount only owns 49% of this property, so that their share of this rental would be just over $74 million. The November investor presentation says that Green Street assigns this property at 11% gross asset value. So according to Green Street, the shares are worth $16.25 each. These three buildings are worth a combined, if you add up 25% plus 18% plus 11% gross asset value, you get a combined 54%. So 54% of $16.25 is $8.77. So the way I understand this, if we buy a share of stock and we pay $8.77 per share, we're basically paying full asset value for these three buildings, and we're getting all of the other buildings in Manhattan and San Francisco for free. I feel like an infomercial, but wait, it gets even better. The shares are not trading at $8.77 a share. They're trading at $6.11 as of 12/3/2022. The ratings, it seems like it's kind of underfollowed here. I couldn't find a value line report on it. Morningstar gives it no moat, but says their fair value is $10.78 a share. But keep in mind, this is by their computer algorithm. There's not an actual analyst looking at this, just the computer from Morningstar. So take that with a grain of salt. It seems pretty underfollowed. I couldn't find any recent S&P, Moody's, or Fitch that are rating their debt. I think that could be because most of their debt is not really bonds. It's all mortgage debts and notes. So it's not, I guess they maybe have no reason to rate it. Green Street Advisors has done reports. But again, I don't have access to see the actual report, or I'm not a subscriber. So I just have to, go by, okay, that's the final findings of them. Insider trading, there's nothing really over the last couple of years. We go back further, we can see that some insiders were doing some buying. I see Monarch Alternative Capital selling a bunch of shares. This, of course, is after they failed to get the board of Paramount to accept their $12 a share cash offer to buy up the company. I think it's pretty clear to me, this is just my speculation, that, what they really wanted to do is buy up the whole thing and probably just dismantle Paramount. So they probably sell out each individual building for top price, and they would play that arbitrage between what the stock is selling for and what the actual buildings would sell for. That value arbitrage is what they were going for. It didn't work, so when you look at the proxy statements from 2022, it shows a strong amount of insider ownership. Albert Beeler, the CEO, president, and chairman, he collectively owns 4% of the company. The shares and units combined. Katerina Otto Bernstein, a director, owns 5.1% of the company with the shares and units combined. And then there are other big shareholders, the Otto family group, the Otto family members, and this German company that is like the Otto family own a collective 13.9% of the shares and units combined. The Central Bank of Norway owns a collective 8.2% of shares and units. Alexander Otto owns 5.9% of the shares and units. And then Monarch Alternative Capital owns a combined 5.1% of shares and units. But this is on a decline after losing their bid to buy the whole company. So it's very much like a closely held company with the Otto family and the CEO not only running the company, but really owning quite a bit of the company. So let's get into, there's pros and there's risks, but I would say the pros here, the good things is that the Otto family owns so much of this company. Their skin is in the game, and it shows, they're not about to take any of what they would consider lowball offers from these couple of investment firms over the last couple of years. It's interesting that the company has indicated that they would entertain offers in the past, but clearly it needs to be at the right price and not some lowball thing. They obviously think that something above the $12 per share is what they would be looking for, since we know $12 didn't do it for them. Maybe looking at this company, maybe I'm missing something, but I just don't understand why the shares are so cheap. I don't get it. Where else can you get a deal like this? The real estate market hasn't crashed yet. I guess only on Wall Street, where you can get these things where, it could be mispriced. My best guess, just a guess on my ends, but best guess is that investors are looking at office buildings, real estate companies that own office buildings, and they really want nothing to do with it. But that's just my guess. What do you think? I think risks, there are risks. The big risk here, uh, you know, office buildings and office building REITs are clearly out of favor with investors, and it clearly shows in the share price here. What if work from home or hybrid work becomes like a permanent thing? Obviously, then we certainly wouldn't need all these office buildings everywhere in the country. I think that this is probably mitigated to some degree by the high quality central city locations that Paramount owns their buildings in. I can see the more suburban office buildings, those block, cookie cutter, undistinguished buildings probably failing and dying away before buildings like the ones Paramount owns. I think in a worst case scenario, you could probably take these buildings and turn them into apartment buildings or something. But, we're talking worst case scenarios here. Another risk is how concentrated these buildings are. We can see on their map, all of them are close together. All of the Manhattan ones are close together. Likewise, the San Francisco map shows the buildings are all clustered, right around each other. So obviously, the economy of that area, crime statistics, I don't see it as a major issue, but areas do change, especially when we're talking years and decades. Long term, I guess it's a risk. And I would say because of the top three buildings accounting for a significant chunk of their revenue, if anything should ever happen to these three buildings, it could be very, very bad. So it's just something to keep in mind. Interest rates are a risk. The good thing with this company, though, the interest rates, 87% is fixed rate, which I love to see. 100% fixed rate. I know that's not always possible, but I think they have a good amount of fixed rate debt. So there's not a lot of variable rate. Uh, I Yeah, looking at this, studying it, I bought some stock just recently as I study this. My all-in cost here is $6.35 per share. I think $6.35 per share is pretty cheap for this. Although I've known about the company for many years, I've never had a reason to really do a deep dive. It was never, if we go back years, it wasn't this cheap. So, yeah, so now that I've gotten into this here because they've gotten so low, um, you know, and would I buy more? Well, yes, I think I will probably most likely buy more of it. Um, I find that the stock is undervalued at this point. The trouble, though, is trying to figure out the value of the buildings they own. Who do we believe here as far as what this collection of buildings is worth? The Morningstar computer says it's worth $10.78 per share. Or do we believe do we believe Green Street Advisors? They're saying the net asset value is $16.25 per share. I know they always say, well, what about, it's worth, something is worth how much somebody is willing to pay for it. So we could look at Bow Street's offer back in 2020 of $9.50 to $10 per share on the more recent Monarch offer back in February of 2022, all cash offer of $12 per share. But whatever number you want to assign, I think all of these numbers give us a reference point to show that there's some margin of safety here. You know, when the stock now is trading for $6.11, that margin of safety makes me feel more comfortable. So this, by the way, is not financial advice. This is just my own 2 cents, my own opinion. But I would say that's the truth about Paramount Group stock. Please leave your comments, opinions. Thank you for watching, and everyone have a great day.